Hi guys, today I'll be explaining a blog that I wrote. A lot of people asked me to explain my blog in a bit more detail since even though being beginner friendly, there were a few terms which were a bit difficult to grasp or follow for a complete beginner to the finance world. So I'll be explaining the same. So here also in my website shivanshuconsults.in you have the blog. There's also a link to the Medium page since I write blog on both. I will turn off the Wi-Fi so that there's no disturbance from Twitter and other places. And what you can do is you can print or you can download a PDF if you're an iPad or laptop user or a PC user to make life simpler. And this is the downloaded PDF version of my blog. Right, it's written by me. Even though it's a 9-minute read, I think it'll actually take almost 20 minutes to complete the whole thing if you read it meticulously. So what is basically EPS? As the name suggests, it's Employee Pension Fund. What is a pension fund? Basically an amount you get in your old age. Simple. Till now it's easy to follow, yeah. And it is managed by EPFO. Right? EPFO has something which manages three things. EPS, sorry for my handwriting, it's the it's the pencil, it's not Apple Pencil, that's why maybe, and EDLI and few other things, but mainly these three components. I call them the trio. Right, so it manages this, and it's like your not exact equivalent, but maybe if the Americans know it, it's the 401k of the version of India. So I think this part would be easy if you read it on your own, but the relevant part which I would like to explain is you can get the pension generally at the age, but the benchmark is 58. But of course, it means exit at the age. If you work till 60, then you're not eligible for pension. Your pension you get only after when you exit, or as early as 50 if you want to opt in for it. However, there is some price which you have to pay. I'm sorry. Now let us go here and we will see how EPS contribution actually work, right? So you know that whatever your basic salary is, let's say I have here considered it to be 50,000. Now 12% is employee of the basic. Now here I've considered basic salary, not our CTC, but the basic salary to be 50k. 12% will be the employee PF and 12% will be the employer PF. But out of the employer का 12%, we pay 8.33 to EPS. Okay, and this is 15,000 per annum. My bad, that should be PA per annum, and a 3.67 goes to EPF. Now, if that is the true case, then if we say employee is 6k, here 8% of 50,000 is about 4k. So 4k should go in EPS. Why is only 1250 is going? Because we have a maximum cap of 15k a year, which means monthly only 1250. 15 divided by 12, which is 1250 can go into EPS per month. Rest again goes back to the PF. I think this example is a very good illustration of the same. So what is the other section of the book, which is ROI? Now that's the interesting part, my friend. Now ROI, let us go to the juicy part of ROI, where we assume that, let's say you started a job at 22 and you are retiring at 45. Right, this is what I've taken. So 23 years of working age. Each year has 12 months, 1250. So you have approximately put in 3.4 like, and you are never going to get this money back. It's basically going to go pool. Either you'll get pension or you can withdraw corpus. I will talk about that a bit later, but yeah. Now EPS, how do you calculate how much pension you'll get? So I have worked for, let's say, 23 years. So service is 23 years. Maximum pension salary is capped at 15k. So one more thing, there is a bonus rule which most people generally forget to add in the calculations. If you have worked for 20 years, let's say I am a employee right now in Daimler, right? I am an employee in Daimler Truck. Okay, it's a German company and it's like Mercedes Benz of buses and trucks. So I worked here for 5 years. Now this is my first. Second, I work for, let's say, another company like IBM for 5 years. Then let's say I work for Amazon for another 15 or 10 years. So now my total tenure or serviceable years is about 20 years. So if I have crossed the 20-year term, you get 2 bonus years when your pension gets calculated. So here 23 will become 25. That's all it is. And the same it is inputted in the formula, and we get 5,317 rupees for one. And what is this? Now, this is your complete pension. This, if you take it at the age of 58. But let's say you don't know about your lifespan. Let's say you have a hereditary condition. Or let's say you want to take a pension early at 50. So you reduce each year by 4%. So 58 is the benchmark age, but you're taking it at 50. So 8 years difference. Each year, the reduction is 4% rate. So 32% cut. We multiply it here, which will be 0.68, and that figure will come out to be around this. You can cross verify the figures if you want. Approximately it should be the same. Now this figure still does not look very bad, but we are seeing this figure, we are thinking it's respect to today, but no, we have not factored in our inflation, right? If we factor in our inflation at 50, the pension which we are getting inflation adjusted will be 620, and for this, which will be, I think, okay, this should have been carried to 5317. I'll update it in the blog. This will be around, I think, 600 or lesser. So basically, the calculation that comes out to be, I think it did not get copied correctly, is is basically half of what it looks like today. Like if you see 1250 divided by 2 is 625 rupees. This is literally the half what you're going to get. Now that is basically, if monthly you're getting 625 rupees, it will not even be a weeks of medicine. I think anyone who's a diabetic or a BP patient can probably agree with me, having Telma or Metformin. I think people who know what I'm talking about. Now, is this unfair? No. As the amount contributed each year, okay, let me explain what I mean by this. So your salary basic was 50k. Now it increased to 55k with 10% increment, which you got on your either corporate CTC or your government salary, or basically as a salaried employee. But did your EPS contribution change? No, because it is by law capped at 1250. So inflation is increasing, salary is increasing, but this is not increasing. And in finance world, if something is not decreasing, it is something is not increasing, then it is decreasing only, right? So now comes the other part. So now we have understood this is not unfair, right? Because this is actually decreasing with respect to inflation, if you think about it logically. So it's not unfair for you to get that amount. Now an employee becomes, now okay, now let us go to the other important part. How can I apply for early pension, and who is eligible for EPS at all? Any employee who has worked for at least 10 years is eligible for some form of EPS, right? Like if let's say you have worked in IBM for 3 years, Daimler, like my company, for 3 years, and then another XYZ company for 3 years, but then you quit the workforce for life and you become a small shop owner or something. Then what you can do is, if you don't want to get pension, you can withdraw the whole corpus of EPS, whatever has been accumulated till now, EPS plus EPF lump sum payout. It's called lump sum lump sum payout, right? You can do that. But if you don't want to do that, you don't want to do EPS or EPF, and by chance you have worked for at least 10 years, if it's even one day above 10 years, then you're eligible for pension. And you can either choose to take it at 58 when that's the normal time, or at 50 it can start. It is irrespective. See, even if you leave the job at 45, you can only start receiving pension at either 50 or 58. That is your choice, depending on 50 or 58, depending upon whether you want the rate cut or not. Now, what are the documents you need? So I was explaining to a friend too, so that's why you have the tick mark. You need a 10 years of service, and you need to make sure that that's reflected in the portal. Generally in the portal you can see, right? Even I have seen, fill out the form 10D. Nowadays even online submission is there. And then once this is done, you will startly getting in the bank account. So you can apply, but the pension will be 20% less. So the example I think is more than what it shows. Now let me explain you some history about the EPS ceiling. EPS started way back, and in 1995 when it was actually launched, it was only 5K a month, one third of what it is today. Then in 2001 there was slight increase to 6.5, and in September 2001 it was almost more than doubled and made 15,000 per month, right, to somewhat cobble with the inflation. I don't think it should be much higher. But then now your doubt might come, why didn't the government make any provision to remove this capping? Well, that also has been covered. Let me go ahead with the FAQs and I'll tell you. I think what is EPS by now is cleared. It was there in the starting definition also, but if you just want to read an FAQ, that is there. How is the pension calculated? I think the formula was mentioned before, and this is like in case you just want like a snapshot, right? This is basically in a bit more detail what happened if I exited. So you can withdraw the whole lump sum as I explained before. Can I start pension? Yes, but rate cut is there. I think I've already covered most of these. This is also there. Mm, Now comes the fact that I was talking about. What is a higher pension under EPS? Now, a lot of people did not want this capping. They wanted the percentage of their salary, like that 8.3, to be actually put wholly into the EPS fund because they wanted a proper retirement benefit. So, for that, the Supreme Court gave a provision to remove this capping and do the whole basic into this. Now, who were eligible? So, first, those who were members before 2001, right? And then who did not file a joint declaration, then who applied for higher pension before July, which was deadline after Supreme Court ruling. Is it still available? Like, suppose if you or me want to know, the EPFO has stopped, and if I'm not wrong, I'm not so sure about, but it was Jan or July of this year. So I think now when my video will be out, I don't think any one of us will be eligible for higher pension. So that's a dream which is now a dream only. Now, what are the pros and cons? I think that's quite intuitive. One being, of course, that you have much bigger pension. It's indexed, so it's inflation adjusted too. But then, of course, requires a large portion of your adjustment to be blocked in the EPS fund. So you cannot get it back. And you can never get a lump sum. And this is more of a so-so point. I mean, there is a slight inflation adjustment, obviously, because your salary is also increasing with respect to inflation. So I can't say, of course, the benefits which you get in your EPF, the EPF interest rate is about 8.15 to generally 9% tentative. This is quite lucrative when compared to the ROI, because see, the ROI which I've shown in my calculation is only inflation based, but if you want to see from investment of 3.45 lakh, right, and let's say even if you live to an average Indian male lifespan of about 65 and you take the starting pension at 50, 15 years. So if we see, I just want you to see it, a 3.45 lakh you have invested in, terms. So what I will do is I will go to an SIP calculator. I'm doing this as we speak in the video only to give you a small sort of a calculation, a real ROI. Maybe I will add it as a part of the blog after I upload the video, but I think this should be a bonus for people who are watching the video. So I'll do one thing. I'll do a systematic investment plan since it's always 1250 and no increase in the amount expected return. Let us say that I only adjust this for inflation, which I'm taking as 6.5%, and term was 23 years, right? Okay. So maturity amount, if I had done an RD also of inflation, should have been 7.78 lakh. Okay. 7.779, so I've just rounded it to be 7.78 lakh, and this would have been at the age of 45. Now till 50, if I had done a FD, right, of 7 and an interest rate of, let's say, about 6.5, again I'm just taking inflation, the whole then this would have become again. So this was 15, no, this was 23 years. Now another 5 years plus. Now this becomes about 10.74 lakh. Okay. Now if we take a interest payout FD of, let's say, 10 lakh 70, so 10.74 lakh and 10 lakh 74,000, and let's say again 6.5, it should be more because it's not real CAGR, but let's say I do it, and I do it for, I retire at the age of 50 and I do it till 65 for 15 years, then my monthly pension or my monthly interest should be about 5786.26. And how much, my dear friends, am I getting here in the starting pension? 5317, right? 5317. So how much pension am I getting? 5317. So again, this was 6.5. If we adjust for real inflation, 6.4 and all, I think this figure will be equal. Right. So what I'm trying to say, if to simplify and not to overcomplicate, the people who love finance may like this calculation, but people who are not big fans of finance, to make things simplified for you, the average EPF ROI. So the EPF ROI is equal to inflation. That's it, simply speaking to you. And this is also not bad news because it's a tax-free income. So I think more or less getting inflation back also is not a bad deal nowadays, especially. Of course, we should aim for higher. Whereas if you see, this is not EPF, sorry, this is EPS. EPF ROI, on the other hand, is inflation plus, you can say, roughly, if you are going by the real CAGR formula, 1% profit. So that's a proper growth which I like. But yeah, that's basically about it. So can we start pension at 50 while we are working? Okay, this was also one of the questions. Like, let's say I'm 50, I'm working in IBM, but I still want a side income. Maybe I'll make a SIP out of it. No, you cannot. You have to exit employment. So this is something that was important. I've already told the procedure to, when you change job, how can you link your PF and everything. Okay, now this is an important part. What if a person dies before 50? So two things will happen. So 50%, okay, so I think I was explaining before only. So spouse will get 50, children will get 25% of the eligible income. And it I think it is a choice that they get to choose whether to start from which year, right? So that is one more rule. So that's there. So it's called a family pension. It's reduced, sadly. It's not the value which you get. So the value which we got, right, that 5.3k or something, we will not get the whole amount, but the 0.5 50% or 0.25, if you don't have a wife, the wife has also passed out, only for the kids. So yeah. Now suppose if a person has no wife, no kids, no dependents, EPS is not paid to anyone. It's gone, basically. It dies with the person itself. And then EDLI is something that I'll explain, close to my heart. So now, what if a person dies 50 and having started at 50? Now this is another use case. Pension becomes monthly annuity. 50% gets, children get 25. Dependents or parents will, if no children. Now suppose if you don't have children but you do have parents alive by any chance, then parents are also appointed, but it stops with the member's death, right? So this is there, both before and after. Person dies with them, pension dies with the member. I think this is the line that grasps the thing mainly. And may go to only legal heir, which means either siblings. If no one is alive, then sibling, nominee, or relative. But they have to be family. And that too, in family also, the definition is quite complicated. I'll explain it. And EPS corpus is non-refundable. Now EDLI, a quick add-on. Now alongside EPS and EPF are also covered under EDLI, which basically is a life insurance. Now it ranges up to 7 lakhs, so it's 30 into your average salary plus a bonus of 2 lakhs. So everyone around gets about 7 lakh who are in good corporate jobs. But if your company already provides a term life insurance, for example, HDFC or Aditya Birla, Aditya Birla, then you do not get eligibility for ADLI, right? And if people want to know how ADL actually works, I think I have a very good this thing. So I think it's 75 rupees or something, and 75 rupees is cut not from either the contribution from your employee. So you have employee, you have an employer, right? You have two contributions. So this 75 rupee deduction is not from either one of them. It is extra. Company pays the 75 rupees extra for that 7 lakh insurance. But mostly if you're working in an MNC or a proper, even an Indian based MNC or a good standard company, there's a good chance that you will be getting your own private insurance. And in that case, the company asks the employee provident fund to let go of their EDLI, because EDLI, which is employee linked insurance, is compulsory by law for all companies to have, unless and until they have a private insurance which is giving equal or better, yani 7 lakh or more benefit to its employees. If it is, then it is exempted and you're not covered by EDLI. But then of course you have more protection, so you should be happier. So either way, I think EPF is doing somewhat of a, I won't say great, but a decent job in this aspect. And then in EPF, EPS, all three, the nomination rules are tied to this. A family for a male member is strictly wife, children, whether they're married or unmarried, and dependent parents. Female, it's husband, children, and dependent parent-in-law. Right, so that's also one more thing. And if they're unmarried, then maybe parents also. So EDLI gives it now. Now, you cannot sponsor friends or same-sex partners, or you cannot make anyone your nominee who's not part of your this. Like, even if you have a sibling under special conditions might become a dependent, or not even a dependent if they're adults, but maybe a nominee. But you cannot make non-blood relative, this is a key word. Non-blood relative cannot be made a nominee. Some reference lists are given here, and that's about it. Thank you so much. I hope it helped a lot. Some other blogs you can go for me. I think it's good, and I hope you have a good day ahead.